Robinhood Markets Inc. ticker symbol HOOD is currently trading at $43 a share. If we look at the stock over the last year, it was previously trading at $66, but with the recent turmoil in the market, this stock had a massive drop of 44%, but it's had a little rally since then. Is this the right time to buy? That's the question we're going to be answering today. We're going to be looking through Robinhood's most recent earnings and then taking it to my automated stock valuation spreadsheet to see if Robinhood is a buy or a sell using the discounted free cash flow model, comparable company model, and Ben Graham formula for intrinsic value. So if we just see Robinhood, as we said, it's had a pretty good year, up 128% despite this recent drop-off. If we look at the 5-year chart, a similar story. IPO'd, it was $60 a share, everyone was buying it, and then it had a massive sell-off to about $10 a share. A lot of people didn't like the stock with the whole GME controversy, but since then, since about 2024, it went on a big rally of about 500%, but then recently it's had a bit of a drop-off, and is this the right time to buy? So, firstly, before we get into that, we'll just go to my sheet, type in the ticker HOOD, and this will load up all the latest company financial data so we can have a deeper dive. If you're interested, check out my Patreon. It's the $4 tier. Let's just quickly go back to here. Not that one, this one. So $43 a share, market cap of 38 billion, PE ratio of 28.04, sorry, which is actually lower than the market average, which is 28.30. Earnings per share, $1.56, a beta of 2.14, very high beta stock, which is why I got hammered recently with the volatility and the recent market drops. Analysts do say it is a buy, $66 a share. So we have the revenues here. We'll just quickly jump into that. 2.4 billion, all-time high, as you can see here, 21, 1.8, 1.3, 1.9, and 2.4. Now, if we quickly go back to the sheets here, this is the fourth quarter. Well, let me just zoom in just a smidge. This is the fourth quarter and full year results for 2024. Just some highlights here that I want to draw to initially. Record-breaking quarter, up 115%, 1 billion. Net income's up. Gold subscribers are up. Just on gold quickly, Robinhood Gold is their premium subscription service that you can see here. You pay a $5 a month fee. You get higher interest on invested cash, 5%. You get bigger instant deposits, margin trading, market data, advanced market data, extended trading hours, things like that. So this is quite a popular thing that people have been using. And if we just close that down and go back to the earnings, which is here, 2.6 million people are Robinhood Gold subscribers, up 86% year over year. Just talking about the sorry, let me just find this here. In terms of revenue, as we said, total revenues increased to year over year to 1.1 billion. Transaction-based revenues increased 200% to 672 million. Cryptocurrencies, that's a high margin of it, 358 million, up 700%. Options revenue up. Equities, everything is up. If we just scroll down here, we do have the numbers down here. This is the 3 months ended, you can see here, versus the prior year. Transaction-based revenues up. Net interest revenues, other revenues all up. Total revenues up to 1.4 billion. And then we have the full year here. Once again, 3 billion here. 1.6 transaction, 1.1, and 200 million other revenues. Everything is up in terms of revenues. Net income, they are now profitable. 530 million. Free cash flow, good free cash flow generation, 2.15 billion. And if we look at operating cash flow versus capex, capex is very small, operating cash flow is up. That's why they have positive free cash flow. Shares outstanding, they actually did buy back some shares, but you can see here this is very early in the company life cycle, so we don't want to be seeing too much here. Just other things I want to talk about just before we jump into it. As we said, explosive crypto growth. The gold's expanded, international expansion. They have been doing buybacks. Let me just search for it here. Repurchases. Share repurchases, 160 million. So they are doing buybacks at quite an early thing. Gold subscribers up, net deposits up, cash and cash equivalents up. Everything is looking quite good. In terms of 2025, expansion in crypto, more products and growth expected. So it's looking quite promising. But let's see what the models are saying. Firstly, we'll have a look at the discounted free cash flow model. Let me just put some Obviously, we don't have enough years here to see. We've only got a few years of data, but that's why we have a look at some of the averages here. So currently, it doesn't give us a price, but we can have a look here. So firstly, revenue growth. We had 20% quite consistently. We're expecting 2.9 and 3.6 billion in the coming years. Let's see if what the analysts are saying. 3.7 and 4 billion. So that's a bit more bullish. We'll increase this to about 30%. 30%. Okay, cool. Still no price. Net income margin's harder to see here. Let's take the most recent year, 22%. Still no price, obviously. And finally, net income to free cash flow. We'll just do an average of the last few. Okay, oh, that's 200%. Okay, we'll just do 100 initially. Just to see that, puts at $33. So for them to be sort of at a cheaper rate here, at a good price, they need to have increasing revenues and increasing cash flows to put them at $50 a share. But you can see here they have about 400%, 2.1 billion in terms of the net income. Now, obviously, if they did continue that, that would be a very, very high price, $134 a share. But it does look good on this free cash flow model. You can see here the free cash flow ratio currently is less than 20, which is quite low, especially for a fast-growing tech. Well, I say tech, it's essentially a brokerage, but you can see here. Okay, Ben Graham formula for intrinsic value. Let's just quickly see what analysts are saying in terms of growth. They are expecting 15% over the next year, which is lower than the S&P, higher than the S&P 500, but puts it about $30 a share. Now, obviously, the AAA bond yield is pretty high at the minute, 5.32. If this was to come down to even just, well, it need to go back to 4, but if they can get to 20% growth, that would be a buy. Finally, the comparable company model. This is the way of valuing stocks, looking at their competitors. And then we'll have a look at certain metrics here. We don't have the full numbers here because Robinhood hasn't been around for 5 years, or in terms of IPOs. Now, hard to get direct competitors, as there's not too many, or at least they're owned by bigger companies. But we'll try here. Firstly, we'll do Charles Schwab, major brokerage firm, SCHW, and this will load all the data for Charles Schwab. Next, we'll do Interactive Brokers Group, BKR. And what we'll do is we'll just see if we can compare against these two and see what we can get first, because obviously Google are not a good comparison. I'll compare against I'm looking online, it's saying to compare against Morgan Stanley and Goldman, but I don't think they're very fair valuations. Okay, so in terms of equity, or in terms of market cap, Robinhood's the smallest, revenue smallest, growth rates I would say the highest, but obviously it doesn't here. I think we had about 22% actually for the years. EBITDA has a value, net income most profitable, good margin, similar to Schwab, higher than Interactive Brokers, which is quite interesting. EV to revenue, it's the highest. EV to EBITDA, it's the highest. PE, it's actually the highest as well. And 4P, we don't have a value, but you can see here. So puts it probably overvalued compared to those companies, but they're a lot more mature in their growth. So yeah, comparable company model doesn't like it too much. Ben Graham formula for intrinsic value doesn't like it too much, but I'd say the discounted free cash flow model is pretty keen on it. So that is quite interesting. Right, guys, thanks for watching. Please give a like on the video if you enjoyed. Subscribe if you're not already. Check out my Patreon. It's the $4 tier for the sheet, and I'll catch you guys next time.